Okay, day 402. We're looking at yesterday's deal that was on 2837 24th Street. So if you remember correctly yesterday, we looked at the deal and we said, hey, it's probably not a deal unless you can buy for 30 grand roughly, right? We went through a bunch of different scenarios. Don't remember this? Check out the live on YouTube, youtube.com/@Kent_HE to look at the analysis we did yesterday. Now, the interesting part about this is, well, what if we are able to turn it into a 4-bedroom property, right? So yesterday when we last left off, we said, hey, what if I go and add $10,000 to the rehab? So it's about $71,000. And that would give me a new rent of $1,300. So today, what we're going to do is we're going to start analyzing the deal. And just for those that need a refresher, right? Here is how the condition of the home currently looks like. You can tell that's probably a huge cosmetic rehab. You can call it a gut job you want, but I definitely need new kitchen, need new bathrooms, and need new flooring and complete paint over. Okay. Now, given all the rehab that needs to take place with a $71,000 rehab, can I get this property, right? What's a BRRRR strategy? Buy, rehab, rent, refinance, repeat. For us to get to a place where we can get back out in a perfect BRRRR situation, get back out all the initial invested capital, is by pursuing and making sure that our ARV after repair value is as high as possible. Now, let me go to, so there might be a little bit of background noise. It looks like it's better. And what we're going to do is we're going to find out, okay, based on what I have been tracking in 35208, one, I've been tracking some properties that have sold recently. This is sold in June 28, 2024. This is 1505. So you can kind of see the condition of the home. And you can say, hey, that's not a bad, I mean, this is like a right middle of the road type of home. I mean, could they use a little bit more help? Yeah. But they got about $97 a square foot. Okay. Now, if you remember correctly, I've also been tracking on what properties have been coming onto the market. So slightly different tab, 4-bed, 2-bed, but all these homes that have been coming onto the market in 35208 has primarily been in areas where the square footage, I mean, where homes are above much higher than the square footage of our home, right? Our home is 1440 and these are 1900. That's well over 15-20% of the entire square footage. So these aren't great comps, and you can kind of see that the dollar per square footage starts to deteriorate once you kind of go above 1,900, 2,000 square feet, because your dollar per square foot kind of takes the opposite effect where it starts going down. So it's kind of like you're peaking on the dollar per square footage perspective once you get to 1,800 and 1,900 square feet. So personally, I don't think any home bigger than that is worth it. So what I want to do is to give myself the best comfort and the most confidence, especially using homes that have been recently been on the market. I'm going to take 1505 and 1508 Fifth Ave. If that is my comp, right? This is in the Fairview neighborhood. Let's see how far I am from Fairview. Oh, this is right there. So this is not that far from these comps. So if I were to go from 2837 and then I would drive to 1505 Fifth Ave West, let's see how long that takes me. That's literally half a mile. So that's probably going to be a pretty good comp, right? How do I find comps, right? The ideal comp would be if I can get a property that looks like this property, same square footage, and I saw the sold price for the property immediately next to it. That would be a perfect comp. The further you go away, the more and more risky it is. Now, obviously in Birmingham, it's a very street-by-street neighborhood, so it could be completely different, but at least it's only half a mile, right? So I'm mitigating the risk that the comp is completely off, but I still have some confidence that I'm using a relatively good comp. So if I use 1505 Fifth Ave at $97 a square foot, and let me add in the other property on 1508 Fifth Ave, I'm going to come up to a rough square footage of roughly around $80 because I'm also including 2821. This property right here that's contingent. Oh, it's contingent for 135. There you go. So it's being contingent for 135 grand, but this home is a lot bigger. So you can see again, right? The dollar per square footage has gone down in a dollar per square footage perspective, but I'm going to keep it as is, right? Because I want to renovate the home. I'm going to say my middle of the road estimate is going to be $80. But then I'm also going to do an estimate of my dollar per square foot, assuming $97 a square foot. And let's see what that does. So if I were to say this is going to be $80 a square foot, right? What's my ARV? Well, it's this property on 2037 is 1440 square feet. Okay. It's a 3-bed, 1-bath, buy for $68,000. We estimate the rehab is going to be equals what I got from yesterday. $71,656. That includes the number to turn into a 4-bedroom. Okay. That's why I'm taking comps of only 4-bedroom properties, even though this is a 3-bedroom property. And let's say I'm able to buy the property for $50,000, which is below the asking price. I got $1,200 for real estate taxes, $1,050 for property insurance, $1,050 for that. So I got I'm assuming I'm borrowing all private capital, so 100% down because I'm buying all cash with borrowed capital at roughly around a 10% interest rate. My loan amount is going to be $121, which is made up of my purchase price of $50,000 plus my rehab of $71,000. And that added in about $4,000 of holding costs, closing costs, and another $7,000 of holding costs, which is my interest, my carry, and my utility and escrow amounts. So my total capital for this deal after all is said and done is probably closer to $132,000. Okay, great. My rehab just simply kind of goes to, hey, what if I go over budget? I want to make sure I always have at least sort of the bad case scenario and liquidity aside. What if it goes over, right, by 20%? What if there's a 3-month delay? I just want to make sure I have that on the side. All right. Now, for my rent, I'm going to put in $1,300 for rent because that's what I used for rent yesterday. My refi, assuming my ARV is $114,000. If I can get a loan for 80%, so 0.8 times ARV, I can get back out $91,000, assuming I can get it for 7.25% interest rate with 3 points on the refinancing. I will be leaving in $41,279 in the deal. So that is my analysis right here. Pay special, values, and source formatting. Just going to delete this part so I don't confuse anybody. I always like to go through for scenarios. So in here, if we think the ARV is, what do we have here? 114,480, 114,480, and the purchase was $51,000 with a 71,656 rehab. And when the purchase price is $50,000, right? Then in year one, it's about 7% or 8% cash and cash return. And you can see that this cash and cash return is very low because of the fact that we're leaving in so much money in a deal. Now, watch what happens when I adjust the scenario, right? What if I'm giving myself the quote unquote best case scenario at $97 a square foot? If I go to $97 a square foot, now this property is going to be worth $139,680. $139,680 at $139,680, assuming everything else stayed constant with a $50,000 purchase price and 71,656 rehab. Now all of a sudden, you go to the refi, you're leaving in $21,000 only because you're getting 80% of the ARV. So there's still a little bit of money left in there, but now your cash flow is just so little. You have so little money. Pay special, balance source formatting. 6.5 here. Let me do the decimals right here so you guys can kind of see the difference. 7.4. You see cash and cash return go higher because now your debt service is more. So that's your biggest difference. Your debt service is more because you're borrowing more money. Okay. Now, let's say you're able to get the property for $40,000 instead of $50,000. Again, this is the best case scenario now. If I go to $40,000, I should just go to $35,000 so I can increase my chances of leaving as low money right here. Boom. So now Now that I can get my purchase price down all the way to 35 grand, I'm now only leaving in $4,294 in the deal. And now the deal is much, much better, right? So if you want a lot of room in your deal, you would need your ARV to be worth 139,680, and you would have to get the property for 35,000, assuming your rehab budget is still the same. So this kind of tells you what you can or cannot offer depending on how much hedge you want. Like, what would be an amazing deal? Maybe it's 40 grand, not 50 grand. Again, this is not investment advice. I'm not soliciting any investments on this call. I'm simply showing you all how to run the scenarios so that you can get comfortable, right? If the ARV is 114 grand, it might not even matter that your purchase price is 35 grand, right? What if that is the case? 180. So let's say you got a floor scenario of 80 grand, $80 a square foot. Well, now all of a sudden you're leaving $23,000 in the deal again, and now it's only a 13% deal. That's a huge amount of risk, right? For 13%. Well, you might say, hey, if I get double-digit returns, then that's worth my time and energy. That's why you got to talk to your own investment professionals. That's why you have to be super clear on what is your tolerance for the risk you're taking on. And if you're leaving in $23,000 in a deal, well, if you borrow 100% of the capital from a private money lender, how are you going to get the last 23 grand back? From cash flow? Okay, well, if it's from cash flow, you might not make any money for, like, assuming you make cash flow of 3 grand a year, you're not going to make any money for 7 years. Are you okay with that? Is the lender okay with that? Those are all the scenarios you got to run through. So again, I hope this was helpful. Sometimes BRRRR is a very complicated strategy, but when you're able to break it down like we did yesterday. Yesterday, we looked at the deal from a simple, conventional perspective. Like, what if I bought this property using a 25% down, financing the rest of 7.25%? What might that get me? What do I need to buy it for? Well, at $30,000, I might get about a 10% return because my capital doesn't cost as much. I mean, these are all the different scenarios that you have to run through. So for you to figure out, hey, is this worth the execution risk? Meaning, if I take on a project and I manage a contractor and I'm relying on a contractor to show up on time every single time and do the work that he said or she said that they're going to do. What if they show up late? What if they don't do it on time? What if they find something behind the walls and give you a change order that causes you to have to pay a lot more money? Well, those are all real problems. So those are the issues that you're going to have to face head on. But at the very minimum, you have to go through these different scenarios so that you can be prepared on what can happen if that does happen. And sometimes you got to walk it out, walk that scenario out so you can get comfortable with it. All right. So I hope you all have an amazing Tuesday. Please go out and vote. Doesn't matter who you support. You got to go out and vote. Happy Election Tuesday, everybody. I'll see you all again tomorrow for day 403. Have a good one, everybody. And you guys want to copy the spreadsheet, just make sure you DM me the word BRRRR on LinkedIn or Instagram at InvestingKenHe. And that's the fastest for me getting a copy of the BRRRR calculator. All right. Have an amazing day, everybody. I hope you all enjoy the rest of your evening. And I hope you guys celebrate that you guys got a vote today. Have a good one, everybody. I'll talk to you all tomorrow for day 4. I just give it to you for free. I don't have anything to sell you. Just DM me on LinkedIn or Instagram, and my assistant will send it to you on Thursday when she checks back in. All right. Thank you, old school. I appreciate you. I'll talk to you all tomorrow. And make sure you send me and message me your email when you say BRRRR. Thank you. Have a good one.